my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A third consecutive indecisive spinning top yesterday, this time with a long tail instead of a long tongue, but still indecisive. It would be a fourth consecutive one if you didn't count Thursday's bearish hurrah, but instead looked at it as an indecisive spinning top as well. I continue to think this is an unusual situation here. You see, I usually look for indecisive patterns when, rightly, the market can't make up its mind because of competing bullish and bearish pressures. In this case, I think it is indecisive because those pressures, bullish and bearish, are absent. You see, we're in a fairly free area, lacking pressure between the overhead recent 50% Fibonacci line at 119.75, which ironically and above, well, ironically is still there for a while, and above that, the flatlining long moving average currently at 120.03. Whilst below we have the June 2018 high at 118.51 and the continuation trend line creeping up from the old December 2019 to May 2020 lower diamond trend line pattern, and that's at 118.47. It's actually like being in the eye of a hurricane, though I personally think that's a way over dramatization. And so far today, small move lower but within yesterday's range and with a couple of lesser Fibonacci levels at 118.97 and 118.87 supporting the market. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday for a long tongue topside, which I think may be indicative of an important step. You see, this market broke out of the main pattern that's been guiding prices higher since last September, and that's the June-September 2020 bullish shift pitchfork. Now, ever since that break, the market has made efforts to try and get back within it. Only they haven't worked, and yesterday may be the bullish last hurrah for that idea. Hence the long tongue on top of the market may be it, as it was halted actually by the flatlining medium moving average currently at 139.51. Okay, so what do we have below? Well, the next support is the May 2020 to date uptrend currently at 137.66. It's not that far, but it also is coincident with last week's pipe bottom. I never said any of this was going to be easy. Overall, this adds support to an idea I've recently put forward of a possible very large adamant leaf type double top formed over this year. We'll just have to see if the market is willing to go that way. So far today, the beginnings of a small drop into a lower level, but still within last week's range. Euro sterling. A hammer pattern yesterday, usually seen as bullish, but made just before the significant overhead resistances that are actually consisting of the upper bear channel line of the recent bear channel, that's currently between 85.21 and 86.11, plus the paralleling nearby partners of the medium moving average currently at 86.18 and the short medium moving average at 86.19. This doesn't really help in my decision yesterday to still leave target X as a downside target of the roof stroke half diamond pattern in the 85.25 area. So far today, a very cautious attempt higher based off the flatlining short moving average currently at 85.83. This actually looks a more serious attempt higher at the overhead resistances than earlier ones, yet it is a very, very cautious approach. US dollar against the Indian rupee. For a small day's range yesterday, the action had quite a bullish tinge, as it was a combined bullish engulfing pattern and bullish opening white Mariposa. Additionally, the market closed up over the 50% Fibonacci line, the February to April 2020 move at 74.26, after the last 2 days of last week's failed attempts to try and do that. This still leaves the important overhead limiting force of the 74.40 level. This is this point that I wish, once again, to remind you, dear viewers and listeners, that I mentioned 4 weeks ago and every subsequent day since that a pullback up from the big fall between April and May could see a move as high as the 74.40 area and still keep the bearish incentive. Please note that 74.40 is not, repeat, not a target. No, it is a limit to the move higher if and only if the market wishes to still keep the bearish incentive. So it's not like you haven't been warned in recent days. The only thing to bear in mind is that this slow build-up is a more serious threat now that the overhead resistance at 74.40 is more clearly defined. So far today, a steady open with a dip lower below the 50% Fibonacci line, but then a pullback to slowly once again be either side of the move. I'm wondering whether it's actually trying to edge higher or not at the moment. It looks like an indecisive doji cross right now. US dollar against the Brazilian real. A second indecisive spinning top yesterday, though some may call it a very small bearish harami. Personally, I think that is stretching a point a little too far, though I will concede the long tongue on the top side of yesterday's range seems to me to be indicative of a more bearish intent. Overall, the market is still moving towards fulfilling the two previously mentioned bearish scenarios of a large bearish halfway hesitation and a more recent bear flag. We have target X in the 42.80 area. This is the provisional and preliminary target for the whole mid-April to date action being a bearish halfway hesitation pattern. Additionally, we also have a bear flag action since late May with a target X1 for such a pattern in the 44.75.5 area. Meanwhile, overhead we've got a fairly big congestion area between 5 even and 5.11 even, with a nearby 50% Fibonacci line of the October 2019 to May 2020 move at 496.58, which the market tested on Friday. I also point out we're very soon about to have a dead cross on this one, with the medium moving average pushing down through the long moving average. Right now, we have overhead also the 50% Fibonacci line of the October 2019 to May 2020 move at 496.58, whilst below we have the 50% Fibonacci line of the July 2019 to May 2020 move at 484.26. US dollar against the Mexican peso. An indecisive spinning top yesterday as the market comes near to a crunch decision tomorrow night. Below we have the support congestion at 1971.68, whilst overhead we have the neckline of the February to March head and shoulders top currently at 1994.80 and the April to May base congestion zone between 1985 and 1995. So with just a day tomorrow left to make up its mind, for all these moves down and up and down again in June, we are set to make a possible monthly key reversal here. So if we close on Wednesday night, so tomorrow night, the 30th, either over 2022.70 or under 1994.70, then we'd be on. Anything in between would mean a lesser outside month. Right now, we're looking at a monthly key reversal down. Now, so far today, a small move higher, but nothing large. As I said earlier, we still have tomorrow to deal with before the decision on the close of the month. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.